This video is going to be how to get started in real estate investing if you're in the military. We had an awesome member in our community ask a question that was kind of a multi-part question. And I was like, wow, if I answer most of this, basically, it's going to be like a how to get started guide of sorts. And so I'm just going to dive in this way. And the four things that were asked about in particular was the housing market, how to choose where to invest, basically. Should you buy education? When do you get into education? How do you get educated? That kind of a question. And then also where or when in your journey do you start connecting with individuals like agents and lenders as you're PCSing and getting new billets in the military and moving around, right? And then also, last but not least, what are some investment opportunities with ADPI, which we're an real estate investing education company. We teach real estate investing, but we also have investment opportunities now. And so I'll cover that just to make sure we cover like the passive investment options as well. So to get started, right? One of the best things you can do is you can buy a primary residence. The question in particular with the housing market, though, was on multifamily, but I'm going to cover it from like the single family, which is residential real estate, like 1 to 4 units, like a single family home, duplex, triplex, fourplex. And then I'm also going to cover multifamily as well, because both kind of hinge upon the same types of metrics. However, there's a key difference before I get into that. Single family real estate, the actual valuation, the price, the appraisals, all happen based off of what's going on in the market. When these are trading hands, right? When people are buying and selling, what are the price tags on these homes? And you basically look at the comparables in your area in the recent history, and you're like, okay, what can you expect homes to be at if you try to buy or sell in that area? And then you can, that's how the appraiser themselves will do it. They'll look at comparables, and that's what your real estate agent's going to do, trying to gauge on what like the ultimate like appraisal is going to come out at, right? Because you don't want, for example, if you're buying, you don't want the appraisal to come low, unless you feel like that'll give you negotiating power. Because then if it comes low, that appraisal is what the bank will use to lend to you, and then there's that gap, and you're going to potentially have to come out of pocket, or you're going to have to struggle with the seller to have them drop the price. But anyway, I digress. Point is, it's important to be able to understand the market, and it's all based off of comparable sales. Okay, that's single family homes. Multifamily homes or commercial real estate. It also matters like it's called a cap rate. Like what is the going rate at which these properties are trading at? However, what's even more important is how well the property's operating, which is cool because you as the investor has control over how well it's operating to an extent. You can change what kind of expenses you have to an extent. You can increase rents or whatever you want to do with your property to increase the revenue and adjust the expenses. Because with multifamily or commercial real estate, the thing that matters is the bottom line, like how much money you're making before you pay the mortgage. This is called an NOI, net operating income. You look at that. And then based off of that number and the rate in that area at which things are trading at, it's kind of like a multiple. You're like, oh, if the multiple is 10 and it made $100,000, that means this property is worth $1 million. See how that works? And so it's important to understand that these properties, residential versus commercial, their value is based off of a different thing, right? One is just what are things trading at? Another one is, okay, how well is it operating? Because you can have two side by side. They look exactly the same renovation levels, basically same location on the same street. But if one is operating way better than the other, this one's worth more because it's basically a business. So when we're deciding on the market, first of all, I own a 56 unit apartment building outside of Indianapolis that I have never seen. I also at one point had a turnkey rental in Georgia that I had never seen and I had sold. Like, it's okay to not have ever seen your property if you have good managers and systems in place. However, or maybe partners that have seen it, you know what I mean? Like you leverage other people and technology a lot to make things happen no matter where you are. And that's why it's possible to do in the military. And that's what ADPI teaches a lot, how to get this done while you're in the military. But again, so multifamily and single family, commercial and residential, you should look at certain metrics in a market of whether you should invest there, even if you're not there physically. And that's the beautiful thing is if you're not there physically, you can look out for geography and job growth. Those are the things that I look at a lot. There's so many metrics you can look at. However, for me, those are like two big dominoes because with geography, you can determine where the city, right, for example, or that market is going to grow potentially, literally just based off of geography. Like there's mountains or a river on one side, you know that it's probably not going to be developing too much that way. It's probably going to be developing the other way. And so you look at the housing prices increasing in certain neighborhoods, and then if yours hasn't been increasing that much lately, you know that there's going to be a squeeze, and people are probably going to start moving into your neighborhood next. I literally looked at neighborhood pricing in California when I bought my home in Oceanside, and I saw that my little area wasn't appreciating as fast as the surrounding area. And then lo and behold, 2-3 years later, it popped off because people were outpriced in the other neighborhoods. So geography is really important, but job growth, like numbers wise, that is the main driver. For me, that's the big domino, because job growth determines population growth. Population growth determines demand, right? And supply and demand is the most important thing when it comes to pricing anything in business, period. It's the underlying thing that drives value, okay? That is literally the value formula. So it's really important to understand supply and demand. In my opinion, job growth is that one big domino. And the thing about job growth is you want to make sure that in that area, there's not like a one-horse pony show situation where it's not like a single industry determines all of the job growth, right? And so you really just have to do a lot of investigative due diligence work. Like you have to just research the city, see what kind of opportunities are on the horizon, see how not only is the job market growing, but what are some of the key industries and businesses that are in that area that provide stability, that maybe have been, jobs that have been around, or companies that have been around for decades or over a century, and see how many of those are there to figure out how well established that market is. And then if you're seeing job growth there, like that gives you a good warm and fuzzy, right? Because again, then population growth happens, which drives supply and demand, so on and so forth. So I think that's about it. Like geography, I talked about path of progress. When we covered the neighborhoods, right, with other types of geographical things to think about. And it's not necessarily the neighborhoods. It's like if you're looking at how pricing is changing, there's like certain websites where you can look at you can literally, they'll like color code counties and show you which ones are like the hottest, which ones the prices are going up the fastest or the slowest. And so it'll give you a map to identify where you might want to jump in, where it's still not growing as fast. So I digress. Moving on to education. Education, wow, this is kind of a hot topic, especially in the military community, because the military, let's just be frank, is used to either discounts, sorry I said it, or that things are going to be free, like the GI Bill, right? So you get free education potentially. And that's great. That's a part of our compensation package. That's a part of the benefit of being in the military, of sacrificing for your country, right? Very, very important. However, not all education is created equal. And especially if you pay for college, what if your degree isn't that valuable by the time you graduate, or if it's not valuable at all? I mean, not all degrees are created equal, and we all know that. So when it comes to education, is you got to look at what the potential is and kind of match up with how comfortable you are with taking those risks and that financial investment for what the potential outcome is. And so, for example, the environment is critical for education, in my opinion. Is it just a course, or are there other people that you're going to be there with that are going to be doing that actively? Like if you pick a certain major in college, you might not be doing that actively with the other students. You might just be learning about it. You might not actually be practicing your future career while you're in college. Whereas, for example, our education, our real estate investing education, everybody you're with in our masterminds is actively investing in real estate. So you see things happening as you're learning it, which I think is very valuable. So and it's also helpful to get that inspiration in that environment of others succeeding, because you can be like, if they did it, that means I can do it too. And so that goes beyond just like learning the material, so to speak. And also you learn from their mistakes so that hopefully you won't make that mistake. And in real estate, mistakes can be expensive. And so if you can basically pay to be a part of that like closed environment where you're learning from each other, you're inspiring each other, you're feeding off of each other's energy, that could have like a 10x, 100x multiple on your investment just to be a part of that niche group, right? So that to me is what valuable education is. And there are certain majors, there are certain universities that are great at that, but some are not. And so as an education company, we're trying to replicate an environment that's very conducive to success, because this brings me to my next point is the only thing that's going to be the best way to evaluate a education company period like ours or any other education companies, what is their success metric? Is their success metric your success? If it is, then you know that they're thinking long term. They're not interested in making a transaction for a certain course. They're interested in making sure you succeed, because they know if you succeed, word of mouth happens, and then they become something that organization, that education company grows in a completely different way. It grows beyond what like the typical marketing can do. If the product is better than the marketing and the sales, that's when any company wins, right? So at ADPI, success metrics is everything. At our military multifamily academy and mastermind, our students have closed on over $1 billion worth of real estate. Okay, like that's hundreds of thousands of dollars in acquisition costs, asset management fees that they've been getting, in investment dollars to their wealth that they've been like capital that they've been earning for helping other investors make a lot of money as well. Like it's just transformational, right? So that's why success metrics are so important. The other thing with education is you need to make sure that there's an actual method to the madness. It's not just like, here's a bunch of information. For us, if you're in, like the question was specifically multifamily real estate investing, we have a framework where we focus on you getting a team built. Because with multifamily or commercial, it's all about the team. So you need to figure out who you are as what your role would be, what your personality is fit for best. You pick a role, you build a team, and then you take down deals. So it's not only information, it's like a structured way of creating a team and then acquiring deals, right? So I think structure is important, because then you have more accountability to your team members. You have accountability from coaches. You have accountability from just being around other people who will kind of push you forward, right? So when it comes to buying units, I think the question was specifically talking about multifamily. That's a big thing, is you want to be in an environment where you can build a team. So the third thing was connecting with real estate professionals, meaning like, and I'm not talking about the IRS tax designation, I'm talking about real estate agents, lenders, insurance providers, so on and so forth. When you're PCSing, when is a good time to get a pre-approval? When is a good time to start strategizing with some of these professionals? I would say the answer is now. And we have two different ways of doing this. Either you can connect with literally an agent or a lender at your next duty station or your current duty station, start getting pre-approval, start discussing like your strategy, because they're going to think not only about the next deal that you're doing or the current deal you're doing, but the one after that, and the one after that, one after that. And that's what's important about ADPI. We think about like long-term for your investment like portfolio. But another thing you can do is you can also jump on a freedom call. So if you go to activedutypassiveincome.com, we have freedom calls. It's in our resources. And that's where you can we round robin as a team. We just hop on calls with you and we're like, hey, we basically figure out what the next step is for you. So if you have a question, we won't get off the phone until you have that question answered, until you know what the next thing is, how we can provide value. If we need to connect you to somebody, we'll do that. If you're asking just a random one-off, like, hey, do you think this property manager is good based off of this, that, and the other thing? We'll just sit on the phone and talk you through it, right? So that's what the freedom calls are for. So I would say there's no reason to wait. If you want to connect with somebody and kind of like, just have a discussion, get a warm and fuzzy about your direction, jump on a freedom call or jump on a call with one of our agents and lenders. We'll definitely help you out. Last but not least, point number 4 was investment opportunities with ADPI. If I understood the question correctly, it was like, what does ADPI invest in? What can our members invest in? So there's a new opportunity that we just rolled out. We're raising capital for right now. It's called a Regulation A+ fund. It's a hybrid equity, like crowdfunding opportunity for our military community and also anybody that you all know. It doesn't have to be only military, but our audience, our target audience for this, our niche that we're focusing this opportunity on is the military, right? We're not going to turn people away if they want to invest, but we created this specifically for our military community because we wanted to make sure that, in the military, if that's your primary occupation, you're probably not going to be an accredited investor, meaning you're probably not a millionaire. And so it's difficult to get into deals like some large apartment complexes unless you know somebody, because the SEC just won't allow it, because that's just how the rules are. I'm not going to get into it. And so what we decided to do is spend well over well over 6 figures, there we go, on establishing this fund that allows pretty much anybody to invest. And there are some caveats, but the minimum investment is $500. Obviously, invest more. We'd love you to invest more. But that then gets pulled together, right? It's crowdfunding. And then we buy multiple apartment complexes with this. And then basically everybody shares in the returns. And there's no fund level management fees. It's just an incredibly groundbreaking, unique opportunity for the military. So that's one thing you can do. And obviously, but that's if you want to just passively invest. If you want to acquire your own properties, then, primary residences, that's the way to go to get started, or single family homes or multiplexes, do a house hack. If you want to just buy a renovated property that somebody else renovated for you, turnkeys are great. We can connect you with turnkey providers. And then also multifamily. You can either be an investor on somebody's deal, or you can be the operator that acquires the deal and brings investors on. You could just be a joint venture with maybe 1 or 2 other people and just knock out a deal yourself, like I did with my parents. Or you can invest passively in ADPI Capital, our fund, right? Like I talked about earlier. So those are all the opportunities. That's how you kind of get started, is you think about what are the markets, what is the main niche you want to focus on? Is it residential or multifamily? There's also kind of like a hybrid of residential, which is short-term rentals, mid-term rentals, and we have an academy for that too. And our residential mastermind is students from both from short-term rental and they're both focused on short-term rentals and residential, traditional residential, like 1 to 4 units, long-term buy and hold for cash flow. Last but not least, when you're getting started in real estate, okay, I would just caution everybody to focus on the cash flow. Cash flow is the most important thing. Is the property at least going to be breaking even? Like, you don't want it to, burn a hole in your pocket every single month. Is the property something that's going to actually make your lifestyle better? Is it going to make you money every single month? Is it going to be an asset, not a liability? That's what you should look at. So without further ado, I'm done with this video. Thank you for watching. Markian Sitches out.